Hi, this is Christian Chase with Chase Real Estate and ChaseForeclosure.com. I'm here today with Brien Hodgman, and Brien does the financing for a majority of our investors who are buying these foreclosure properties to buy, fix, and sell, buy, fix, and rent, doing the cash out refinances. Brien handles all of that for us. And what I wanted to do today is just talk with Brien a little bit about, the different types of financing options that are out there. And there's really two main ways, Brien, that you and I are talking about on a day-to-day basis. Brien, by the way, sits like right outside my office, so whenever I have a financing question, I can like yell to him and say, Brien, what in the world's going on? So one of the ways that investors can finance is doing a commercial loan. This is through like a small community bank. And one of the upsides with it is you typically have maybe a little bit lower in points and you have a little bit lower of an interest rate. But the downside to that particular loan is that you have to finance your own renovation. You have to take the money out of pocket and finance your own renovation on the property. So that's like a commercial loan. Now, Brien has access to all of those types of loans. And with investors, just tell us a little bit about, the commercial financing.
Sure. Any of these loans are going to be commercial loans because you're buying a property, that needs renovation. Now, the local bank route is a great way to go. The interest rate's a little better. As Christian said, the fee's a little bit lower. There are some negatives. Obviously, you're paying for the entire renovation out of pocket. They have some different rules. For example, they will only lend to Illinois residents. The other option that a lot of the investors use are asset-based loans. The advantage there is it's less documentation. We're not verifying income or employment. The rate starts roughly about 3/4 of a point higher, but that's all based on credit, experience, and liquidity. Our job basically is you choose a property with Christian or Christy. Actually, we'll get you set up prior to that with pre-approved financing so that we can give Christy and Christian a proof of funds letter. At that point, as soon as you commit to a property, we've already collected most of the documentation. We may need updated bank statements, but that's about it. You're ready to go. Christy will send the property over and bam, we'll get the loan in process that day. And generally, we're closing in 30 to 45 days.
Yeah, so what Brian's saying is like that first way is doing a commercial loan or a small community bank. Now, Brian's connected with multiple community banks and is able to do the loans. But again, downside is you have to fund your own rehab. And some of the other downsides with that, and I'm not trying to discourage anybody from doing it. I personally have done a lot of commercial loans over my career, but I know some investors are concerned, one, hey, I've got to take the money out of my pocket. Two, credit, like running credit checks and stuff like that,
Sure,
is a little bit different with the small community banks and qualifying?
Exactly. And keep in mind, the local banks, they also run on a debt-to-income ratio, where asset-based lending does not. That can be an issue for some clients, certainly the ones first starting out. In my mind, and I think Christian would probably agree, the local bank is a great route for somebody that's got a lot of experience, has done this prior. Most of the first-time investors tend to go asset-based, but honestly, we can take you to whatever the best deal for you when you commit to that property is.
Now, I'm always going to use, like, they've got the jargon, asset-based and all that type of stuff,
Yep.
and I just love the lender's jargon here, but there's, and I'm going to put it in, like, my terms, and I need it to explain my way, is you have the small community banks, commercial loans, you're taking your money out of pocket, some more requirements there. Then there's the private money loans or asset-based lending, and that's what Brian's talking about. That's option number two. Now, the positive part about that is, or I should say the negatives. The negatives with doing an asset-based loan, more points, higher interest rate on the property, but they will finance really the whole kit and caboodle. They'll finance the purchase and the renovation on the property. And so if you're like, hey, you know what? I don't mind leveraging this thing out. And the properties do work either way. You could go the commercial route, or you could go the asset-based lending route or private money lending route. And the deals are still a good deal. You're just leveraging more the other way. So with the asset-based lending, the downside to it is the higher interest rate. And in the interest rates, I guess, one thing I wanted to say to investors, and I think this is really, really important, is that the interest rate really doesn't make much of a difference for you and I as an investor if we're flipping a home. And because we only own it for like 4 months, 5 months, we own the property. So I don't care if the interest rate's 12% or 8%, it doesn't change the complexion of the deal because of how short we own the property. Now, if we were going to be going into long-term financing, like we get it all fixed up, cleaned up, and we want to get it rented, and then we want to do a refinance on the property, asset-based lending may not be the way to go, or may be the way to go.
Sure.
If you're going to be getting like a 25-year loan or something like that. Now you're going to have a lower interest rate with that asset-based lending. So, one of the things, Brien, I think, is what are some of the requirements then for qualifying for asset-based lending that differ from like a commercial loan?
Just to clarify, they are both commercial loans, which means you can close in an LLC. Even the asset-based loans are considered a commercial loan. If you want to do a conventional loan, which is certainly the best rate and fee, that is considered a personal loan. At that point, say you purchased a property and you turn it into a rental, hey, I want to go conventional, we could turn around, you could quick claim that property over to your name and do a conventional loan. The negatives there are you can really only do 10 of these properties in your own name. Now, the other option, asset-based lending or hard money, as it's often referred to, we can do long-term refinance on a rental property. We can do up to 30 years after 90 days of seasoning. Once the property's completed and you have a tenant in, we can do that. The local bank doesn't really do that. They will do a 5-year on a 25 AM.
Yeah.
Yep.
Yeah, and so that's the downside to when you're going to refinance a property. So let's say you bought it, you fix it up, you get it rented, now you want to go to refinance. You really need to be going to Brien for like the refinance end of it, because I can't go to that small community bank because most of them don't want to hold paper that long or a loan that long. They really want in and out, in and out, the flips is what they're really looking for.
Sure.
Brien takes over, he can go to asset-based lenders for the refinance, or he can even go to the secondary market, which is like Fannie, Freddie, those types of loans to get a long-term loan on these properties. And so there really is, what the purpose of this video is to just let investors know there are two options. And the first option is commercial loans, low interest rate, lower points, but you got to take the money out of your pocket and fund your own rehab. Asset-based loans, Brian's going to be able to do those, higher interest rate, higher points, but they will finance all of the renovation or a majority of the renovation. What is the percentage that you see most investors getting of the purchase? So I buy a $100,000 house.
Sure.
And it's got, just to use simple numbers, it's a $100,000 house with $100,000 in renovation. So the total deal is $200,000. On a asset-based loan, if I'm going to finance the renovation, sure, how much can I get for how much do I need really? On that?
Exactly. And as the answer is really, it depends. If you're a first-time investor and you haven't done properties, you're generally looking at 25% down of total cost. So 200,000 times 25% is 50,000 plus loan fees. You're looking at roughly $6,000 to $7,000 in loan fees. Where, for example, you've done 5 properties or in 3 years, you're probably looking at a total down payment cost of 10 to 15%. So at that point, $200,000 times 10%, you're able to leverage your funds more. Now, every client has a different goal. You know, if your goal is, hey, I'd like to do 6 properties in a year, you're probably somebody that's going to do an asset-based loan because you can leverage your funds and turn your money over faster. If you're saying, hey, I'm looking to do 1 property a year, once that's complete, I might do another one, then you're probably a pretty good option for the local bank.
Yeah, and I think that that's the biggest thing is that, you know, it's really having the conversation with Brien and like, what are your specific goals? And I think it's kind of laying it out there. But really, when you're talking to him, it's 2 options. It's like, I want to go the commercial route, I'm going to fund my own rehab, or I'm going to go the asset-based lending route, and I'm going to roll the rehab into my loan. So I think that's the biggest thing. I think what's really nice, though, is having Brien here. He sits, you know, like I said, right in the corner outside the door of my office, which is nice. So I'm like really on top of what's going on. I'm not financially affiliated with the renovation team or with the financial team. They're completely independent of us, but they are people that I do trust. I know when these guys give a green light, say an investor is ready to go, they're qualified, we're going to the finish line on this thing. And so that's something that's very important because a lot of times, you know, an investor is putting up large earnest money or deposits on a property. And the main goal is I don't want anybody to put up earnest money or a deposit and not be able to get it back because they couldn't get financing. And what I feel very comfortable with Brien is that he has the ability in all the loan products. I would say, to me, it's kind of like what Brien is, and it's Brien and Bob. Bob's his partner that works together, and you've probably seen Bob a number of times on different videos that I've done. But Brien literally sits here in the office, and you know, so you've got Bob and Brien. You've got a team working on this stuff. And for me, it's a great resource, and I've got somebody, and I know what's going on loan-wise and what are the best options out there. And so, but as always, you know, reach out to Brien. It's getting set up with them. Even if you already are qualified, it's periodically checking in with the lenders going, hey, you know, I may be taking down some properties in the next 6 months. Get that stuff teed up right away so that when you're ready to pull the trigger, he's already got everything teed up, and then we're just zipping the properties over. It's kind of like, I use this as an example. It's kind of like, as an investor, you want to be like an air traffic controller. You got properties that you're purchasing, you know, that are landing. You got properties that are taxing, that are being rehabbed, and you got properties that are taking off, that are being sold. And you want to tighten that up to that 1 mile spacing between properties, which is like absolutely perfect. And if you've got the financing all set up, that's where this becomes profitable for investors. I mean, you see this all the time. Sure. It's like, if you could just have, boom, I move out of this property, I've got another one lined up, I've got my financing in order, and I'm now rehabbing that one, and then I'm selling it, it's taking off, and I'm moving on to the next one, land them in. It's like being an air traffic controller at an airport. It becomes more profitable the tighter the spacing can be in between properties. So reach out to Brien, and as always, if you have any questions, don't hesitate to give me a call. And as always, check out our website, chaseforeclosure.com. Thanks.
Thank you.